Okay, welcome in, ladies and gentlemen, and all of you trader nerds. So, yeah, Evan and I were talking about, you can actually see your entire portfolio on the Tastyworks online platform. Now, you can't really zoom in or do anything with it, but it's just kind of cool, right? Now, it'll show you the selected value. Like this is I don't know what that is, the normal distribution curve. It'll show you over here the values if you're here, right? So we'd be up 6,052. It shows you how much you'd be down at a 2 standard deviation move. We'd be down $8,792 on a 2 standard deviation move. But what the cool thing is, free falling. Oh, that's a great one. That's a great one. That is a great one, Obi. It's just look at this, y'all. We don't care if markets go up. We're fine. We even prefer that they come down. We just don't want them to go down too much. So that's a really, really good representation of our risk graph that we cannot see on the desktop Tastyworks platform. Hopefully we will at some point. Now, what's this? I'll take off these naked puts that I've been putting out in the 89 days. What's this? Now look at that. Wow. Huh? Look at that mountain. Look at that mountain. Bobby, you're going to lose money. No, we're not, because we got all these things here that make it green, right? This makes it, I said, we've got all this stuff that makes it green. And let's see if I can just show my naked stuff. Look at that. That's my naked puts. Standard deviation down, we're fine. 2 standard deviations, we start hurting. But when you put it all together, I said, when you put it all together, let me refresh it here. When you put it all together, you got that nice little, anyway, you know what I'm talking about. So kind of cool, right? So hopefully they'll get the desktop platform where we can do our thing. Okay. University of Alabama classes. My investment classes start on what day? They start, it starts tomorrow, but let me just show you this. Hold on. Where's my thing? Yeah, here. Yeah, I'm still here, daggit. So here's the syllabus. If y'all want to participate, I don't care. They'll probably tell me that y'all can't. I don't think there's a problem. Hold on. Return to sign in. I was going to share the syllabus with you. If y'all want to get the 3 books that we're going to be pursuing this time, last time we did Lacello, we did some other guys, blah, 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 blah. We did Bogle. I think we're going to do Bogle this time. We're going to do The Wealthy Barber, which is a fabulous read. It's like a little novel, So let me find my courses here. Where's my darn courses? Hold on here. So if y'all want to follow along, you're welcome to. We will meet at 1:30 to 2:30 Central Time. So that's 2:30 to 3:30 Central Time. And hold on, let me get to the right thing. Spring of 2023. Let me show you here. I was going to show you the syllabus in case y'all want to get the books. Show you what books you'll need to read along with us. Where's it at? Syllabus. So you can register for the class and get credit for it, or you can just follow along at home. So I'm waiving all prerequisites. So here's the book, The Simple Path to Wealth: Your Roadmap to Financial Independence and a Rich Free Life by J.L. Collins, which is a fabulous book, just a fabulous book, just simple book. The Little Book of Common Sense Investing: The Only Way to Guarantee Your Fair Stock Market Returns by John Bogle. And then The Wealthy Barber, updated 3rd edition, Everyone's Common Sense Guide to Becoming Financially Independent. So those will be great. Yeah. So there you go. Do that. And I'll post the lectures online, so it'll be a lot of fun. So here's what we see in Tastyworks, right? The desktop platform. And this is on my put debit spreads and most of my long puts. So you see our profit mountain looks really strong, really good. Right? All right, so let's record our stuff. We don't even care what the market's doing. Hey, the market's been up today, it's been down today, and it's just pretty much flat, which means somebody's waiting on somebody to say something. And I know Ed's in the bunker. Ed's probably, he's probably got his wife around him and they're down in the basement or something, because, well, you can't have basements in Louisiana, can you? Don't you flood down there or something? Anyway, so Ed's probably, whatever he's got, some bunker in his house. He's afraid because some Fed person's going to speak or something, whang, cry me a river. So let's see how our account's doing today. I may have everything closed. Sweet Bobby. Yeah, let me open my, what do you call? I had my personal training thing today. Beth did not go because she is not feeling well today. Are you, honey? She said, mm-mm. So that's not feeling well. All right. So let's get our Tasty Works thing here. Let's see how we're doing today. Netlick. I want to play some Jeffersons today, baby. I'm in the mood. Beth, don't you want big daddy to make some money today? Come on now. Huh? Yeah. Beth's all excited. 37,827. 37,827. Y'all know what that means. Cue the band, Roger.
Well, we're moving on now to the side, to a deluxe apartment in the sky.
Yes, hallelujah. All right, today's the 10th. Uh-oh, I had that date wrong yesterday. Look at that. Oh, wait a minute, it's got to go from here. How come, is Rick not here? Does he not catch these things? I mean, Rick's supposed to be here for a very specific reason. He's supposed to catch all these mistakes that I do. He's so good at it. All right, so here we go. 110.23. Our deltas are, go back to privacy mode. So y'all can't see count numbers and people won't hack and steal money and all this kind of stuff. So let's see what our stuff is today. So we are at 6 deltas and 9 thetas. 6 and 9. I'll be still. 6 and 9. That's like I ain't even trading. That's terrible. Jeez. We got to do something about that. We got to put some trades on. And my buying pair usage is 5082. Okay, so I got to do a trade, it's running away from me. We're blue, 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 blue. I just can't get enough in the tank here. So let's see what we can do. Let's go. Now, earlier, this thing said I was set to closing trades only. Look, I was going to show y'all this. Why would I be set to closing trades only? Look here. Cash account notices closing transactions only. Why? I got plenty of buying power. Hey, look, I can show y'all my Netlick here with it. What'd you say, Beth? More sirens. Something's going on, y'all. I'm on an elliptical at the moment, no bunker. I actually added some positions. You're on an exercise machine as we're here, Ed. Unbelievable. Nobody wants to hear about you sweating in your little skimpy shorts that you got on. Jeez. All right, what was I doing? Oh, yeah. So here we go. Yeah, we got to do a trade. Let's see if it'll let me do a trade. If it says I got plenty of buying power here. I don't know what the problem is. So let's go to the table mode. So first of all, let's put in our put debit spread. And we'll go long put vertical. And I want at least 60 days on this, y'all. I want 60 days on this, right? Now, I understand that some of y'all don't like the name of our little new campaign, and that's fine. So for short, I'm just going to refer to it as the donkey. How's that sound? Beth, does that sound better to you? Huh? Well, I just didn't want to use the word NIPPLE. Some people may get offended by that. So I'm just going to call it the donkey. Beth told me the other night she didn't like it. But do I listen to Beth? No, I didn't.
Not until you mess up.
Not until I mess up and I get in trouble, and then I come. But that's what she said. Hey, Beth, that's enough. I thought you didn't feel good. You can stifle yourself now, please. All right, so let's go where we don't have strikes. So we're at 36.70, 36.20. Probably going to have to go at 10 1/4 to fill that. So let's do that at the 66 days or 65 or whatever it is. This thing doesn't update all the time. All right, there we go. Multitasking. He's probably in a gym at Don Kaufman's house, in the Bahamas or Bora Bora. All right, so what do we do now? What'd you say, Beth? The police are here to get me? It wouldn't surprise me. Our pastor on Sunday always says, I want y'all to check in church, let people know where y'all at. I said, I ain't checking in. I said, are you kidding? I said, I don't want people to know where I'm at. I said, the repo guy, he'd come and take everything away from me. Can't do that. I forget what I was doing. 80 days, I got to sell a naked put now for a 111, right? So I'm gonna go to about the 12 delta. But remember, I'm really low on theta. So I'm going to kind of stretch it out here. I'm going to go to 15% probability of money. I'm actually going to go to the 14, just past the 1 standard deviation move. and see if I can get me a little bit extra premium here. Sell one of those at the 80-day or 79 or whatever it is, and work it, baby. There we go. Way to get it done, Bob. All right, so now we're going to do our what do you call? No, we're not going to do a hedge today, right? We're not. Remember, we talked about this yesterday. I don't need to. My deltas are flat, my betas are low. There's no reason, and we already looked at the risk profile. I don't see a reason. I mean, I just don't, I don't see a reason to put in the hedge today. And does everybody understand that? Yeah, really. You should send flowers from my field. Bowden Baptist Church, Bowden, Georgia, 30108. All right. All right, what was I doing? Okay, so we got that in, right? Done. Now you can enjoy the rest of your day. You can go work out, you can go walking, you can go fix your syllabus for your classes at Alabama. I mean, all kinds of stuff you can do. So let's go to the other account. So now we're going to go to the, what do you call, Crimson account, the Sweet Bobby spreadsheet. Let's see how we're doing here. You would think we'd be up here to, hey, wait a minute. Sweet Bobby spreadsheet, 1/3/20. How come it don't have my net lit from yesterday? Did I not update it? Did I not update it? Huh. Well, what did I do? Hold on. Creeks and ratios. Did I not update it? Did I not do this yesterday? What in the world? Okay, I'm really confused now. I'm really confused. So I'm gonna say this was 21 yesterday. Oh, it's like I'm in the twilight zone. The devil. Okay. We'll just pretend we didn't do it yesterday. Oh man, so this is gonna mean this is gonna say we're not up today, probably. 110/23. That is unusual. I hope this is the right spreadsheet. Let's see what we're doing today. What's wrong, Beth? That's grunting. There you go. Oh crap. 28/174. Dang it. 28/174. Oh man, 28/174. So we're down a little bit in that one, but we would have been up. So I'm gonna play it anyway because we would have
Well, we're
been
moving on now to the side, to a deluxe apartment in the sky.
Yes, hallelujah. All right, so now, what is going on? All right, so here let's update all this. So our Greeks and ratios are 20 deltas and say 20 thetas. How about that? I've got a 1-to-1 ratio. I hear Tom Shoshnov say that at Best says all the time. I've got a 1-to-1 delta theta ratio. So 20/20. My eyesight is very, very good. 20/20. Okay. And I guess VIX is about 21. So for some reason that ain't working. And our buying power usage is 6682. 6682. Yeah, I can't keep enough gas in the tank, y'all. I may do I don't know, I may do 2 contracts in this one today. I just might. Market's not up, it's just kind of flat. I may just do 2. So let's go get it. So let's go trade and MES. Do the same strikes and the other, and we're not going to put on a Sweet Bobby hedge today either. Deduct your gain today. Yeah, that's too much trouble. I don't have time for all that. I've already played the Jefferson. Just good. So let's do this. Let's do the same trades. Activity. So today we did the put debit spread at 36.70, 36.20. So where would we do that? 66 days, right? Yeah. So 36.70, 36.20. I think I'm gonna do 2 of those. 36.70. And I've got a new mouse and a new keyboard, and that's kind of, remember I had to spend all my kind of money at the end of the year so we could keep Uncle Sam at bay. And so I'm not quite used to it yet. 10.25. So let's do 2 contracts here. Wrong way, Bob. Let's do 2 of those. And let's sell 2 of the 3480s. 2 of the 3480s. Go find him. 3480s. Unbelievable. Heads on the elliptical. Jeez. Mm-mm-mm. Two of these, right? Let's try to get it up at least to 32.50. All right, see if we can fill there. Come on, baby, fill me. Hit me. Hit me. There we go. In. All right. You know, it's been a while since I have entered them in the spreadsheet. Let me do it because I've been messing up on these a lot by not doing it. So I'm gonna go trades. And we know we did 2 trades today. I normally put my nakeds in first, just the way I do it. And I normally do my put debit spread. So we did 2 contracts of each, 2 and 2. So this is going to be, I just want y'all to see me recording them, right? NP, I like them capitalized, NP6, naked put 6 and PDS 6. Not that they go together, but it was the 3670, 3620 puts. And it was the 3480 puts. So that was a naked at 80 days. 110, oh, sorry, 110, 23. And what do we get in that for? 3250? Let me double check. I think it was 3250. 3250, yeah, and we'll get 10 quarter there. 3250, 10 and a quarter. So this is a put debit spread, or just a debit spread. And then that was at 66 days, I believe. 110, 110, 23. It's an ergonomically correct board, so I'm getting used to my hands being out like this, swap sided. So we got in for 10 and a quarter. Okay, beautiful. All right, so we got those trades in. Now remember, let's see if anything says we need to close it today. Remember, we've got a little auto signal here that will tell us if we're needing to close anything. Now, interestingly enough, we have a short hedge with 38 days and a long hedge with 10 days. So in 10 days, we'll have to cut that off. But everything, I don't see any closing signals. So everything looks really, really good. All right, so let's go now to the other account.
Hey, Bob, you have a question.
Yeah. Yeah. I have a question. I'm not seeing y'all.
Grand's had his hand up for a while. I
Oh
wasn't
my
sure
gosh,
if it was something he wanted to ask before you moved.
I apologize, Grant. Go ahead.
This is Ken. I'm the Grand Merlinian today
Oh, Grand Marinian from Birmingham.
from Sorcerer's Apprentice.
Oh,
You know, this question really goes back to when I have a theta problem too. I somehow, there must be a hole in my tire because I can't pump it up fast enough.
yeah.
But my buying power usage is still in the red.
Mm-hmm.
I'm comfortable there, but I know if I adjust by selling predominantly puts, I'm going to increase my buying power percentage and as well as my theta. So what typically the answer that I do, and that I did it, I wrote a strangle and then I
Yeah.
also wrote a separate short call.
Yep, that's
And-
good.
And that's what it did. That raises the theta without, in this case, it didn't mess with the buying power because especially because I'll have an offsetting put already in play. But I was wondering what your take is because I know your feelings on, you don't like short calls. But see, is there another way? And this is the question, is there another way to increase the theta without messing with the buying power that doesn't involve selling the calls?
Not that I.
What
can
would you
think
do,
of.
in other words?
Yeah, I mean, if I really needed some more theta, I mean, I probably would put on a call credit spread or sell a call. Yeah, I think you're fine with that. Or look, if there's or when you're putting on a new trade, you probably wouldn't put on the put debit spread, because you're listening to your account and your account screaming for more theta. So yeah, I think you did exactly the right thing. And let's make sure that everybody knows why. So
Hey, Bobby,
yeah, Hey,
can I interrupt before you go into that and you can
Sure.
explain both these?
Mhm.
What about if you took a shorter dated naked put and closed it and rolled it out to a longer dated naked put? Like if you have
put-
one in the, if you have one in the like the 30 or 40-day range that you haven't
Mhm.
harvested under the old
Mhm.
plan,
Mhm.
what if you
Well,
just
that would be
close
an
that?
alternative, Ed.
Yeah, I see that too, because
Well, I
what you're
would-
doing is you're increasing your premium, so that's going to increase your theta. Absolutely.
Well,
Yeah,
that's what I
I've
did
done-
first, but I ran out of naked puts that I wanted to roll.
And
And
I did
so,
the same thing this morning that Ken's talking about. I did add a strangle this morning,
Mhm.
as well as I put debit spread. So it
Actually,
is another way to feed the account, but how far down do we want to go in the call rabbit hole? And I like what Ken just said, like he did the shorter dated naked puts first, closing those and rolling those out in time. And then he still needed some more juice. So now he's doing the strangle edition, which
Mhm.
again can either be added by itself or with a put debit spread if your account calls for it. Okay, I'll go
Yeah.
back on mute.
No, that's good though. Ed, get back to your elliptical. That's good, man. But that's exactly what you do, guys. And that's why, remember, we've had this little discussion before. We probably need to touch on it. So if you're new and you go, man, I can't get my theta up, well, do something on the call side, because you can't lose on both. The broker is like, hey, the risk management team is like, look, they can't lose on the call. Well, I can lose on the call put side. Trust me, I've done it before. I mean, not at the same time, but it'll go one way and go the other. But they're saying, hey, since you already have risk on the put side, we encourage you. They reward you by not taking any more of your buying power if you put on a short call or call spread, and that also increases your theta. So that is very, 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 very good. Very, 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 very good. RR says actually your theta might decrease by rolling out in time. All depends on the strike. Yeah, so I would make sure I would roll it to a point where you're increasing your theta, you're increasing the premium, all of that. Yeah, it does depend on what strike that you got. So if you guys are doing this in two accounts, it's best just to copy the stuff that's in the blue. Don't copy this that's in these columns. Remember, the blue is where we operate. So let's go to the IRA spreadsheet. And let's paste here. And this time I did 3 of the naked puts.
One reason that we're having issues with theta, and I'm starting to see this in the test account here, is actually the hedge. As weird as it sounds, the more downside protection we give ourselves, the more of a quote unquote cost is there. So I have found that on pullbacks, even slight ones, my theta will drop pretty substantially. And as we get that push higher, like a couple of days ago, my theta will increase. So I think that the protection to the downside is kind of going to cause some problems in the short term. I think it's going to kind of give us this. It's going to give us this idea that the trade won't be profitable, or that the theta is suffering. And in the reality, in my opinion, I think it'll all play out in the long run. But that's kind of what I'm noticing, at least.
Yeah, I mean, it's kind of a good problem, right? So, and that's why when we go in, I don't think we have to do the donkey all the time, right? So, you sit there and go, do I need a hedge today? Well, not really, because our theta, and people will disagree with me on this, but theta is a measure of risk. So the more theta that you have in an account means that the more premium you have sold, thus the more risk. So what we try to do is manage our risk by not putting on too much theta. So, between 0.1 and 0.5, depending on volatility, is where we kind of hatch out. And we just say, hey, if you want to kind of get a good, nice return, conservative, kind of keep 0.1% in your account in theta. So if I don't have 0.1% in there, I'm kind of like, yeah, I've got on a lot of hedges now, but do I need to add any more? No, I think I'm perfectly fine. Let's go look at the account and tell you worst case scenario, right? This is kind of cool if we kind of figure out what the worst case scenario in the account. So this is the IRA account. And what I've got here is 4 expirations. We're on today's date. So you kind of see, if you look at these numbers here, right? If we just camp out here, it says P&L open as of 110. We're down. That doesn't look right. Let me make sure I'm hiding simulations, and I got everything checked. Yeah, I didn't think that looked right. There we go. Everything checked. Didn't look like I was down. Yeah, so today we're up $656 on these positions. That's the profit and loss on the open. In 11 days, we'd be up 536, 914, 1570, 1974. So we definitely got positive theta, and this will burn. And it kind of shows you if we don't put on any more trades, what we'll do per all of these different expirations. So where your risk goes is where volatility explodes. But let me just show you, first of all, the one expiration. So you kind of get a feel for it, right? So we're up 665 today. If we go down, you know, we're down what, 532 there. If you go down 12%, you're down $6,000. You go down here, you're down $23,000 on a 20% move in one day, which is unlikely to happen, but it could. So what we do is we model the volatility in here. And I kind of say, okay, so if the VIX got, and this is an estimation of what VIX would be, it's the volatility for the S&P 500 for the MES here. So if we went down 20% and volatility popped up to 60%, you know, I'm down $50,000. Now everybody's like, Bobby, this is a $107,000 account. How can you withstand, you know, that? Well, what we'll do is we will roll troubled children out to extend duration. You know, we know what the game is. So it's like, yeah, that's paper losses. We're going to close things at realized losses to roll them out in time to give us extra time. And this is why we don't use all of our buying power, because what if, you know, this thing was down, you know, $150,000, that would be rough, right? Because you got a $107,000 account. This gives us enough time to do what we need to do. Now, is it perfect? And am I Mr. Analyze tab on top? No, but as I understand it, this is what I'm dealing with my risk, and I'm perfectly fine accepting this level of risk. Brett says he's been adding calls since last week, and his theta has ballooned. Oh, that's awesome. Yeah, that's really good. You see, the problem with the market right now, the market has not made a decision, right, as to what we're going to be doing for this kind of first quarter. People are waiting. People are skeptical about what's going to happen with the economy. We know, you and I know that we're in a recession. Now, they've redefined what recession is, so they're saying, well, not yet, but we know. I mean, we know, right? We're in a recession. So it's just a matter of how far more down do we have to go. I am kind of fairly bearish on the market. I did draw the big green monster today, and I drew it on the micros, and it looked like it was the same as it would be on the ES. I just wanted to kind of make sure, because I looked at both of them. So this kind of looks right here. We are over right now. We are overbought. We anticipate in the coming days, I would say within the next 10 days, that we're going to return here. But you do see we have some gaps to fill, right? We got some gaps to fill, but we're overbought for the fair value zone below. This would be probably target 1, this would be target 2, and this would be target 3. That's where we're going, in my opinion. Now, does it matter where we're going? No, not at all. We don't care. And in fact, if this were to happen, you and I are going to be happy, 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 happy. We just don't need it to happen too far. We just want this thing to kind of do this. You know, we don't want crashes. We don't want anything. But we kind of are looking at the 3777 number as a potential target. Hey, maybe in the next 10 days. We'll see, right? You kind of see how this kind of went up almost to that, and it was kind of bound in by that. So it may check it again before we come back down. But I think this is fairly good bearish chart. When I did the whole month, it definitely was a bearish chart. So I think we've got more pain, so to speak, for everybody to come, but it hadn't happened yet. Okay, isn't that cool? That cool stuff. Anyone got any questions? Anything at all? If not, I'm gonna stop the recording and I'll see y'all tomorrow.